Welcome back. In this video, we're going to be talking about the step-by-step analysis process, because I find that a lot of the time when I used to go through courses and whatnot, I just didn't have someone going through systematically being like, right, do this, do this, do this. I didn't have the rules. I didn't have that structure to go with. And I found that that really didn't help me. Okay. And so what I wanted to do with PsychFX is I wanted to make that different. I wanted to just give you those step-by-step instructions. Okay. And so all strategies are broken down into three parts. Number one, we've got our directional bias. Number two, we've got our area of interest. These are the levels that you'll be trading off. And then number three, we've got our entry triggers. Okay. Now I'm going to go into more detail about entries, stop losses, targets in, I believe, the next video or one of the next videos. But for now, I just want to give you that overarching structure. Okay. So don't worry if, when we get down to entry triggers, you're not really sure what's going on. Okay. So the first thing we need to identify is the directional bias. What direction are we, looking to trade in? Are we just randomly, looking for displacement in random areas, or are we trading in the overall trend direction? What are we doing? Now, that's going to be up to you. Okay. But I've given you two different choices here, and it's going to be up to you to go back and back test these things and figure out which one you prefer. Okay. So the first thing is strong higher time frame displacement, ignoring the trend direction. Now, by higher time frame, I mean the higher time frame that you've chosen. That higher time frame can be anything from the 15-minute upwards. 15-minute, obviously, if you're scalping, but then ideally like the 1 hour, 4 hour daily. Those would be ideal kind of higher time frames. But 50-minute, there's nothing wrong with it if that's what you want to use. Okay, and so with this first option here, you just want to focus on spotting displacement. You're ignoring the trend direction. Okay. So for example, regardless of this is overall an uptrend, you would happily look at taking potential sell positions, something like, obviously a trend, again, trend lines aren't really important, guys. It's just about seeing that displacement. Okay. That's a bad example as well. Okay. But you're not married to just being bulls here. If it did print for you a nice sell setup, then you would be totally okay with taking that. Okay. Simple as that. Alternatively, you can look for strong displacement in the trend direction, meaning if we're going up, you are looking for a strong sell displacement. So overall, going up here, just as an example, okay, or over here, we're going up, we're looking for a displacement. So whether you've got like a rough line drawn in here, and then you've got, a zone like this, for example, okay, that is still in the overall trend direction. And so basically that would mean that you would only look for drop base rally in bullish trends, only look for rally base drop in bearish trends. Okay, very, very simple. Remember, drop base rally. Okay, we're not just entering here, we're waiting for it to return to that consolidation and then go up. Okay, that is the proper drop base rally. Okay, and so you can choose either one of these. It's up to you which one you want to choose. Again, you're going to learn which one works best with your personality on during back testing and stuff like that. Okay, now the tools for identifying your bias, the two tools that I mainly like to use is the higher time frame market structure. This can be your highest time frame if you're 3 time frames, or you could maybe even go even one high time frame higher. So for example, if your 4 hours your main higher time frame, you could get your higher time frame market structure from the daily. Okay, and you'd simply on the daily be looking for the current price range. Okay, now essentially, if you go to the line chart, it's normally easier to see, but essentially we're looking for higher highs and higher lows and looking for those areas to be marked on. You're more than welcome, again, to use an indicator such as this in order to spot this. Okay, now the second tool that you can use is going to be the EMA cloud on your higher time frame. So on the 4 hour here, we can simply use this, for example, and we can say, look, as long as this is blue, green, whatever color you've got it as, we are bullish. Doesn't matter if it's pierced through, as long as it hasn't crossed and changed color, we are going to be bullish. Okay, very, very simple. Okay, that's another way that you can do it. And again, if you hate EMAs, then don't use that. Simple as that. Okay. But the main thing that you understand is, supply and demand, a lot of the times you don't really need a trend direction, okay? Because the way that it works is when you come into these levels, they'll normally ping pong between these levels. And so if you're trading block to block, and I'm going to explain exactly what I mean about block to block in just a second, then you won't really need a big bias, okay? And so block to block would basically be if we've got a level. Let's find a good example here. So if we've got a level here, for example, okay, marked on from this kind of consolidatory phase here, okay, let's just say that we're going up overall, okay. Now, if we're trading block to block, we're trading from this block to another block, okay. So we're not looking to catch a huge move. We're just looking to go from block to block. So we could go from that top block to this lower block, for example, okay. Very, very simple, or maybe even extend it down here, for example. We're just trading block to block. If you're trading like this and you're not looking to target, major lows and stuff like that, then the trend doesn't really matter that much. Your job is going to be finding strong displacement. Let me just write this down for you, okay? If you're trading block to block, okay, trend isn't very important. What's important is how strong the levels are. Targets next lower time frame block. Okay, so for example, if you're on the 4 hour, you target a 1 hour block, okay, for the highest probability. There's nothing wrong with going like I've done here, 4 hour block to 4 hour block. However, if you go from a 4 hour block to a 1 hour block, it's much more likely to reach that level. And again, that's going to come from, molding your plan around your personality and really figuring out, right, do I prefer a higher win rate, or do I prefer getting those higher risk rewards? I'm not saying you can't have a bit of both, but there is a definite difference between having a really high win rate and a really high risk reward. Okay. So I hope that makes sense. And remember, if any of these things don't make sense, just post it in the group and I will get back to you, or I'll make another video to clear this up for you. Okay. But essentially, once we've got a directional bias, and we've decided whether we're kind of more of a trend trader or more of just a solely supply and demand and phase trader, then we can pick which tools that we want. The next step is our areas of interest. So these are the levels that we're trading off of. Now, for our areas of interest, we want to use our higher time frame supply and demand levels. So, for example, if we're using our 4 hour for a higher time frame, we want to be looking for supply and demand levels on that time frame. Okay, and we can see here at this point in time, this would have been a supply and demand level. Okay. And again, when I say this, I didn't write down determine the strength of a zone. That should just be automatic when you enter this phase, because once you are marking out your levels, you want to be making sure that you're marking out good levels. That's pretty self-explanatory. Now, the third step is your entry triggers. Now, don't worry about this so much because I'm going to explain about entries and stop losses in the next video. But yeah, just understand right now that we're either going to be entering off a candlestick pattern or a lower time frame structure break in our direction. Okay, and that's pretty much it, guys. Okay, and so an example of me doing this, if we just get rid of all of this, so let's say that we're using the cloud in this example. Let's change pair. Okay, so we can see at this point that we are bearish. Okay, we see we're in a bearish area here, and then we can begin looking for, because we're below here, and then we can begin looking for our zone. So I would draw a zone around here. We can see that we've already had one touch. This would be the second touch. So we're looking for it to at least go higher than this previous here, which it has done. Okay, that's the first good thing. So we've got our area, we've got that all marked on now. Now, next thing we need to understand is, are we trading? I know we're already trading in the trend direction here, but do we still just want to trade block to block? Okay, well, where would the next block be if we were trading block to block? Probably be here, because we have this consolidation phase down here, right down here. You could even draw it from there if you would like, and just plain and simple keep it like that. If you are a trend trader, then you can target the lows, maybe even a bit below the low. It's up to you. Okay. And in this case, we'd have something like this, for example, looking to target down there, just as an example. Okay. Obviously, we were helped by hindsight there quite a lot, but nevertheless, like, it's the same principle, and it's just really, really simple once you just follow these rules. Okay. So I'm going to go into more detail about entries and stop losses and stuff like that in the next video. So don't worry if you're still curious about how to actually get involved. This is just to show you an example of the analysis process and how simple it can be. Get your bias, map out your areas, make sure your area is nice and strong, and then enter. Quite simple, really, when you look at it like that. But yeah, guys, I'll see you on the next video.